Let's discuss the global environment with Manoj Pradhan, EM economist with Morgan Stanley. Manoj, morning. Thank you for joining us. Manoj, I guess the big global event is the FOMC minutes, or the fact that Ben Bernanke will be testifying in front of US Congress later tonight.
I think the tapering off process, which is what a lot of people have paid a lot of attention to, was adjusted somewhat in the last time the FOMC met, and the communication there changed in a subtle but an important way. They suggested in their last communication that there could be downside changes or upside changes to the QE process, and that was brought on, we believe, because of the soft patch that the US economy and indeed the world economy is going through. So from here, I think for them to actually exit QE is a very difficult process in such a short period of time. More likely that the language will slowly start changing. Whether it changes tomorrow remains to be seen, but it's not an end to the QE process that can happen tomorrow. I don't think that's possible at all at this point.
So would you say it will be EMs which will drive the growth for global economy in 2013? And does Morgan Stanley still maintain that global economy will move from twilight to daylight in the second half?
So the second question first, yes, we do think it'll move from twilight to daylight. The conditions are in place. We've seen global growth slow down. The soft patch has induced a lot of central banks to ease monetary policy in what we call the Great Monetary Easing Part 3. And that should support growth in the second half of the year. I think what we're seeing also is that the commodity price correction, which will certainly be difficult for commodity exporters, will be a blessing for commodity importers, which accounts for a majority of the economies globally. And emerging markets will certainly be an important part of the story. Even though they do have growth challenges, the level of growth over there is high enough that they will make a significant and a majority contribution to global growth in 2013.
Manoj, in your last report, you had put India in moderately challenged category. Has India's challenges further eased with the correction in commodity prices?
Well, the commodity story will certainly help if it lasts. India is not the only one. Korea, Taiwan, Thailand, Turkey are all strong commodity importers, and they all stand to benefit. But India's challenges, as I had put them, are moderate from a structural point of view. And so if you want the commodity story to mean something over a longer period of time, the commodity weakness has to remain in place for a longer period of time. It depends what kind of global backdrop that this kind of situation happens. India's moderate structural challenges are relative to its where it is in the development cycle. But let's not be mistaken, it's not that India doesn't have any. It certainly does have challenges that it needs to deal with.
So are you confident that India's growth can pick up as a result of the reforms undertaken by the government?
Yes, of that part I'm fairly confident. If these reforms are pursued over a period of time, they have in the past, and they will in India's case also probably lead to higher trend growth. Of course, there are a few impediments over here. Number one is that the pace of reforms has to be sustained. The implementation is 80 to 90% of the issue, and that really needs to be taken care of as well. If both of these factors are pursued and implemented, then I think the potential for structural reforms to raise trend growth in India is certainly in place.
Manoj, inflation is trending lower. Growth is a key concern. Do you think now there is enough and more elbow room for Reserve Bank of India to consider a rate cut in the next monetary policy?
Well, first, I'd say that inflation is probably trending down in part because of the RBI's hawkish rhetoric. And part of that story has been something that we have highlighted. My colleague Chetan Iyer has written about this extensively in the past. The fiscal stimulus that was used that led to consumption growth was at least partially responsible for inflation being stubborn and at an elevated level. The RBI in its past statements has taken this view on board, and that's one of the things that it has achieved is it's given markets direction in terms of where it would like inflation to go, and it has also acted as some kind of a constraint on excessive fiscal spending. The discipline in the fiscal side of the story, which has indirectly come, I think, from a view that fiscal policy has pushed inflation higher has helped inflation ease. I don't think there is scope for aggressive rate cuts. There will certainly be more moderation in monetary policy if inflation continues to trend down. But India's growth and inflation story do not really need aggressive rate cuts right now. They're better helped by structural reforms.
Right, so the investor community is quite bullish on India. The benchmark indices are trading near all-time highs, barring, of course, the 2 odd days of consolidation. Do you think they are right in their confidence?
It's a very good question, because we're talking about how much of the structural reforms are actually part of the price, and certainly if structural reforms are derailed, we could see some downside to equity markets and to the general sentiment about India. Now, but let's be very clear about this. It's not that sentiment about India is universally bullish. It has changed a lot in the last few months, but I think there is still a lot of resistance to the view that India's structural reforms have picked up. It's more the cyclical story that has encouraged investors in the past. I think there is still upside to be had from here. But again, as it boils down to every one of the questions that I've mentioned, it really depends on whether India's trend growth can be lifted or not.